Hi Chakits, I have been following you and watching your YouTube channel for years.
I have decided to finally relocate to Las Vegas and want to start a new chapter in my life. I know you're the perfect realtor to help guide me to find my next dream home. I am looking for a modern kitchen, large backyard with a pool and a golf course community.
My name is Chakits Krulsawat with Simply Vegas, a licensed real estate agent out here in Las Vegas, Nevada. I help buyers like this all the time, so if you're looking for a licensed professional, give us a call at 702-319-1092 or visit lvhomeexperts.com. Buying a home starts here. Does your house look like and have you been considering remodeling your home for some time now? Well, if you love real estate like I do and appreciate the attention to detail in the craftsmanship required to build a remodel or a gorgeous home, then I got the perfect company for you. Guys, I highly recommend Design Zone Remodeling. They are a stellar company that will turn your outdated home into your own personal sanctuary. They specialize in bathroom remodels, kitchen remodels, and full house remodels. Design Zone Remodeling has a reputation for excellent workmanship, competitive fees, and being able to offer a wide range of services and deliver the outstanding results to their clients. I use Design Zone Remodeling on my personal properties. Give Design Zone Remodeling a call today at 725-223-0871 or visit their website at designzoneremodeling.com to request a free consultation today. Is your credit score holding you back from purchasing a home? GC Credit Coaches is a repair company that's made easy. Their goal is to challenge and remove all negative errors that hurt your credit score. On average, GC clients see about 10.2 negative items removed over 4 months. Start improving your credit score today with a simple 2-minute online enrollment for a free consultation and a complete credit audit. GC Credit Coaches offers competitive monthly pricing, no contracts, no hidden fees, and the service stops once you are satisfied. GC Credit Coaches removes inquiries, collections, charge-off bankruptcies, and repossessions. Don't forget to visit gccreditcoaches.com.
Attention contractors, remodelers, and homeowners. Is your renovation becoming a pain in the glass? Here at Glass Vegas, we take care of all of your glass needs. From a broken window to custom shower doors, mirrors, wine enclosures, storefronts, railings, and much more. We can even help you with new or replacement thermally broken windows. We're a full-service, woman-owned glass company that provides unparalleled workmanship, excellent communication, and great customer service. Glass Vegas. We do glass with class.
And welcome live to the LV Home Experts Podcast. This is where we talk about real estate financing, what's going on with the Las Vegas housing market. So we got a very special announcement today. Fed Chair Jerome Powell just came out and basically said tomorrow they are about to raise rates by 25 basis points. How is this going to affect the Las Vegas housing market? We have a lot to talk about what's going on in today's housing market and just in general in Las Vegas. So today we have a very special guest. Her name is Michele Kubiak. I think that's how you pronounce it. And she has her own team. She is with BHHS Nevada Properties. So I would like to introduce you. Here we go. How's everything going today?
Good. Thanks for having me.
Yeah, not a problem. Take that mic just a little bit closer to you.
Okay.
There you go. Perfect. Did I pronounce your last name correctly? I probably destroyed it, right? Kubiak?
Yeah. Kubiak.
Kubiak. It's Kubiak.
Yes.
I always destroy everybody's last name.
It's okay.
Sorry about that.
I would have done the same with yours.
Okay, go ahead. Try it. It's pronounced
Krulsawat.
Crew suck. It sounds like you said I suck. It's
No.
Krulsawat. You sound like you said you suck.
No, you don't.
Krulsawat. So it's Kubiak.
Yes.
Kubiak. Okay. And earlier we were talking about you're related to a coach, right?
Yes.
Tell us
Former
about that.
coach.
Former coach.
Yes, Gary Kubiak, Denver Broncos is who he used to be with.
Mm-hmm.
Then they moved to Texas,
Okay.
and I haven't followed him since he moved to Texas.
Is it because you don't like that team, or?
I don't really watch football. I only watched it because he was.
Okay.
It was a Kubiak.
Okay.
And football, Denver Broncos. You know.
Okay, yeah.
I'm still a Bronco fan, even though I mean I watch it randomly. I'm like you. I don't really.
Yeah. Yeah. I don't
care about sports unless it's live.
Yeah, a lot of people, they trip out when they ask me or when they find out I don't watch like sports. I'm just not really into sports. However, I do enjoy going to a football game. All right. And, watching hockey and all that stuff. But like, as far as like just watching it on TV and know the stats, that's just not my thing.
Yeah.
I'm more into real estate than anything. But fascinating story. You told me that you've never met your cousin before, which is kind of crazy. Like, how does that happen?
Right. Well, I'm from a really small town in California.
Okay.
And so we never went anywhere as a kid.
Mm-hmm.
When I became an adult is when I'm not so much black sheep in my family, but I'm the adventurer.
Mm-hmm.
So we never left California when I was younger.
Oh, really?
Yeah.
Interesting.
Yeah.
Okay. And how long have you been in real estate?
Since 2001.
Oh,
full
so
time.
Okay, so you were in real estate when the times were great.
Yes.
Then, 2007, 2008, market tanked. Were you still selling real estate then?
Yes.
Oh, you were?
Yes.
Ooh, how'd you hang on? Were you one of those agents that went out and bought Hummers and all that stuff? Because I remember in 2008, I didn't get into the game yet because first and foremost, I wanted to buy a home, but, I had this real estate agent. He took us out, right? And I remember I went to one of these condos in Henderson. And I swear to God, I've never seen this before in my life. Had to be at least 35 cards. I don't really see agents doing that anymore. You know how like they throw out their cards on top of the counter? That's a little bit old school, but back then there was like at least 35 cards. And I was like, dude, I got to compete against all these people. And this is when like a 2-bedroom condo in Henderson was like at $280,000. And the payments were like just so high that I was like, dude, I'm not making this kind of payment. And that was the best thing I did was I just waited. I was like, you know what? We'll just continue to rent. And the market tanked. But I didn't get my license until like 2009. So you were able to survive through all that, right?
Yeah, not easily. I did get a second job at the time,
Okay.
but I kept my license and I kept prospecting and doing, planting the seeds.
Mm-hmm.
And so I didn't just quit.
Yeah.
I've had my license consistently since 2001.
Wow. So what is that? 21 years?
22.
22 years. Oh yeah,
Yes.
that's right. We're in 2023.
Yeah.
God, wow, that's a long time.
Yeah.
I was just born. No, I'm just kidding.
You're a baby.
No, I'm just kidding.
Yeah, you would.
So, during that time period, I think there was like because I got into the game around like 2009. And, I think at that time there were like over 18,000 properties on the market, which was crazy. And I want to say probably at that time, 95% of those were just all bank-owned properties.
Yeah.
And short sales, right? And that was a whole nother ball game. But I remember trying to, and I want to say the word convince because that's kind of negative, for my buyers to buy. Like you could literally buy like a 2,400 square foot home that was like less than 2-3 years old, right? For like $80,000.
Yeah.
$80,000. You know what I would give today to buy a home at $80,000?
Or 10.
Oh my
10
God.
homes.
Yeah.
Yeah, and people still never, without fail, still were like, oh, I want to wait to see if prices will go down.
Why do you think that is?
It's that way in any market.
Yeah.
It feels like.
Mm-hmm. Now, do you think pricing could actually go back down to 2008 levels?
No.
Okay.
I don't think so.
Why do you say that?
Because of California being imposed the mansion tax, just at the general sales event for LVR
Yeah.
recently, we're the top state where California businesses are moving here from.
Okay.
So we have a lot of California buyers coming here still. And you see how fast it's growing. Like every road has an orange cone on it. It seems like, you know, it's like the road decorations. I don't think we'll ever go down that low just by listening to the economic forecaster that was there at the event.
You know, based upon what you're saying, I would have to agree and disagree. I feel that we have less supply, more demand, even though that the market had slid down. And we're going to go over the numbers here in a little bit, guys, probably on the second half. But, you know, we have more demand than supply.
Right.
Despite what's going on across the U.S., it's a local market. Things are moving here, right?
Right.
Like, I'm selling a lot of homes, believe it or not. And clients, they trip out. They're like, wait, I thought the market is tanking. Like, no, the market is not tanking. But you also have to watch what's going on at a, you know, macro level because, you know, micro level, because at a macro level, that would be affected. But I don't see too much of a change going on for the past, like, 30 days here in Las Vegas. And, you know, we're going to talk about, you know, tomorrow the Feds are going to raise the rates, right? It's for sure that they're going to raise it 25 basis points. And we're going to talk about how this actually affects the market. But before we get into that, I want to ask a couple more questions about you because I want my audience to get to know you, okay?
Okay.
You have a team as well, correct?
Yes, it's myself and my assistant.
Okay. And that's actually really good that you have an assistant because I tell you what, by having an assistant, that was like the best money I've ever spent in my entire life. At first, I didn't want to give up the money because it's taken away from you. However, I just noticed that when you have an assistant, it allows you to scale a lot further. Okay, so how many homes do you normally sell a year?
I average about 32.
Okay.
Last year was a little bit different because, you know, I mean.
The speed bump, yeah.
Right, the big speed bump. So I'm on track to do, well, the goal is 50.
Okay.
So.
Which is definitely achievable in today's market.
Right.
However, you got to put in the work. So for all you agents out there, you know, at the end of the day, don't just think you can get your license and you sell homes to your sphere and that's it. Because when it comes to real estate, it's really, you're running a business, believe it or not, right?
Right.
And I still grind it out till today. Like there's just no way around it, right? Now, as far as like what's going on with the, you know, the Valley, anything new that you can share with us that's being built or anything that's coming around the corner? You see anything popping up? Because it seems like Vegas, every time I drive down the strip, there's like a new marquee sign or there's like a new restaurant that's coming up. There's always something. They're always building out here.
Yes, and the casino in the Southwest, I believe it's called the Durango. It's a Station Casinos, and then the Oak, I think it's Oak Point Park in Summerlin. And, of course, the A's are coming here, right?
Do you think that's going to help impact the housing market?
I think it'll help. I think it's going to hurt our traffic because the traffic is where they're thinking about putting the stadium is where the Rio is. So we already have all that traffic from Raider Stadium or Allegiant Stadium. So, you know, and then trying to get on the 15 right now is a nightmare. I was going across town today for a home inspection, and I had to get off the 15 because traffic was so bad.
I know they're like just literally constantly building out here. Now I just drive around the 215 versus just going up to 15. And what's crazy is every time I go the 15 in Tropicana, because that's like where the congestion is, that's where it bottlenecks, it doesn't narrow down the freeway. The freeway's still open. The problem is everybody's got a rubberneck.
Yeah.
Everybody wants to see what's going on. Then when the traffic starts to slow down, I tend to do the same thing. I tend to like look. You might as well. Okay, everybody else is slowing down to look. You know what I mean? You got to slow down anyway. But I do want to announce that they have this new apartment complex, you know, in downtown Fremont area, and Fremont is more like a historic type of neighborhood, and you know, Tony Hsieh, he put about $350 million into the historic downtown, right? Sorry to say that he had passed away, but he has done a lot for downtown Las Vegas. One of the problems that they had for downtown Las Vegas was they didn't have enough living space. And what I mean by that is they didn't have enough housing, right? And the great news about the historic downtown, there were actually incentives, like if you bought a house downtown. And I used to own like a few of them down there. And the city would actually give you incentives to rehab the home. So we took advantage of that, and I thought that was great. However, there's not enough like stores, like grocery stores, and all the people that want to live downtown, there's really just nowhere to live, which really forced rents to go up. Now, this is fascinating. So basically, there was a developer, Sam, right? They started this project years ago, and this is actually, they just got done on a apartment complex, and it looks like the building units is about 480 square feet, right? Per one unit. And it's actually kind of like micro living. So imagine at 480 square feet. At 480 square feet, that's probably just a studio. You got a bathroom, kitchen, right? Your living room, it's all in one. Now, the rent on here, this is the fascinating part. It is $1,100 a month. And it's already 30% occupied. They literally just opened up. So why do you think people are moving into like more of the small micro living now?
Affordability.
I mean, $1,100 a month. I don't know how affordability that is. I mean, that's pretty damn pricey. $1,100 a month. I remember when I rented my first apartment, and it was a 2-bedroom. I probably paid like a little bit less than that.
Right.
And this thing was probably like 1,200 square feet, but we're talking about 480 square feet. But I guess the cool thing about this is that maybe the newer generation likes to live this type of lifestyle, right? Where there's really no bills. I'm sorry, not bills, but no responsibilities as far as you're obligated to make a mortgage payment. Because when you rent a home, you could just bounce out whenever you want, technically, right?
Yeah.
And when you live downtown, if you love that type of lifestyle, this actually may work for them. Now, with the micro living, I just feel like it's not like real home. You know what I mean? Like when you live micro living, there's really no storage. You're living minimalistically, I guess. Like I've already accumulated like 4 cars. My house is like fully packed with junk. I don't want to say junk, but how you just accumulate stuff. So imagine living at 480 square feet. I mean, could you live in something like this? It's probably got to be more like a lifestyle or something like that, right?
Right, for sure, yeah.
That Fountain Blue, it looks like they just did, I don't want to say they broke ground, but they did like some sort of opening for like construction. We talked about this earlier. You mentioned that you didn't really like it too much, right? You thought it was an eyesore?
Well, it's just been an ongoing building. Like they started building it when I had that Sky listing I was telling you about. And then they stopped when the market crashed. And then they started building it. I mean, hasn't it changed a couple different owners since?
Yes, it has.
Yeah. So, yeah, it's been there for a long time. It'll be nice when it finally gets open. It's been a long process, though.
Well, you know what? I actually like that building, and I can't wait till they're done because I want to see exactly how that actually looks. So I want to talk about this. So the federal chairman announces a 25 basis points, right, increase, and this is actually going to start tomorrow. So the Federal Reserve has decided to continue tightening monetary policies for the 10th consecutive increase over the last 12 months. So the committee, right, their maximum, what is this right here? The committee is committed to achieve a maximum employment of inflation at 2% over the long run. And they have decided to raise the target rates from 5% to 5.25%. So basically, they're about to raise this a quarter of a point. So my question to you is that, do you think this is going to affect, right, the mortgage industry? And do you think it's going to affect the housing market by raising rates?
I think at this point in time, navigating through all the federal rate hikes, I think the mortgage industry's definitely been hit and it could affect them. I as for the real estate market, we just scale and do something different. Ask for more closing costs to get the rate bought down.
Yeah.
I've been going to a lot of new builds that offer the lower interest rates because, I mean, most buyers are wanting a brand new home anyways. I don't think it'll affect us that much because people are used to the interest rates now.
Yeah. You know, one of the discussions that we actually had off air, you mentioned that rates went down. And we're talking about this, and I get this question asked all the time. You know, why did they go down even though that the feds actually hiked the rates? So, you know, I've been doing some digging, some researching, and basically what's going on is this. The feds increase the rates, right? When they increase the rates, what happens is people start to retract. And especially what's going on right now with all these banking institutions are filing for BK and all that stuff, right? Mm-hmm. People are starting to get paranoid, even myself, right? Now it's like, hey, where do I put my money? Do I leave it in a small bank? It's kind of unsafe by leaving it in a small bank. So I'm going to go to more of a bigger bank. Or, you know what, with inflation running rampant, the money that I have, I got to put my money somewhere. So if I take a look at every single asset class, everything is overinflated. So what's the next best thing? So there's a lot of uncertainty, right, with people that actually have money. So what they do now is they're taking their money out of the bank. They're taking this money and they're putting it in a safe zone. What is that safe zone? The bond market. So they take the money, they buy bonds at 5% because they're going to get a guarantee. I'm getting 5% and it's backed up by the feds, right? So now that they buy the bonds, they're getting an interest rate. By you buying the bonds out there, what happens is, right, the more bonds that are being bought and sold, what happens is it actually pushes down the interest rates. That's why if you look at today, according to Zillow, rates right now are at 6.095%. I remember a couple months ago, it was at 7%, right? So going back to your story, what you were saying that you can go into a new home build right now, and what they're doing is they're buying down the rate. So right now, if you had a good rate, and you locked in today at 6.095%, but then you decided to go to a new home build, the reason why you could probably get below the 6 or 5.5%, because what they're doing is they're buying down your rate, right? And they're locking in your rate, that's a pretty good thing. And also, you made a good point. People now are starting to get used to the interest rate. Because I remember when I locked into my first rate, and I thought I was the shit. I'm going to be honest with you. My first home, I locked in at 5.25%. I thought I was a superstar. Yeah. And I bought down. I was like, yo, I'm the man. And that actually cost me money by doing the buy down. My wife was like, hey, don't do the buy down because I think rates are going to go down. But I was like, nah, I'm going to lock in at 5.25. And probably about a year later, that shit dropped down to like 3.2. And I wasted like $8,000. Yeah. And I should have waited. So that was a learning lesson for me. Now, what is your predictions as far as the next Fed funds meeting? Because they're going to have another meeting here. And guys, you guys need to be paying attention to this because what goes on with the feds, right, determines of what's going to happen with your credit cards, your loan payments, because we talked about this. There's a total of 2, 4, 6, 7 meetings out of the whole year. So tomorrow, we're going to get the answer as far as the quarter point rate hike. Now, the next meeting is going to be June 13th to the 14th. So stay tuned to that. I personally don't think the feds are going to hike rates on the next one. And the reason why is because inflation is running a little bit rapid. So do you think on the next meeting, do you think the feds are going to raise rates? And guys, let me know in the comments below as well. And I do appreciate all the comments. Sorry for just keep talking. I'm just...
No, that's okay. I think that they will remain the same or go down. Because they can't keep raising them. It's hard to predict, though. Like I've always said in real estate, there's no crystal ball. However, I don't think they'll keep raising them like they did. I think we saw the height of the interest rates.
So what do you tell a buyer, or how does that conversation go when a buyer says, "I'm not too sure if I want to buy now, or should I? Oh, I just want to wait." Like, how does that conversation?
You just have to dig deeper and see why they want to wait. And a lot of people thinking that they'll wait for the prices to go down more because interest rates are going up. But like you mentioned, supply and demand. Well, there's way more demand than there is supply, so I don't think the prices are going to go down. So I explained that to the buyers, and I explained the process of being able to get the interest rate brought down by the seller possibly. So,
I mean, I'm going to tell you this. You can still get some great deals out here in Vegas.
right.
It really depending on the home that you buy, the location, right? And all the moons have to, and the stars have to line up. And let me explain. Where I had a client, there was a house that they liked. Nobody else submitted an offer, right? The seller was in a position where they needed to sell versus wanting to sell. They weren't willing to give the concessions. And I had a client literally close on a home for like less than $8,000. Less than $8,000. So
Right.
look, if it makes sense for you, go for it.
Definitely.
And you know, one of the questions she goes, yo, what happens if the market tanks? I go, bro, you just bought a home for $8,000. You're moving in for $8,000. Who gives a shit if it does tank? Because think about this, right? In 2008, when the market collapsed, well, what happened? We went into short sales. We played the game. A lot of people took advantage of the situation, right? They repositioned. They were still able to stay in their home, right? They tried to restructure the deal. If they couldn't, they were allowed to stay into their home, and they did the short sale. After like 24 months, what happened? They fixed their credit, and all the people that went through that whole drama and all that craziness,
Yeah.
they end up buying homes again.
Yeah.
So real estate is just the game, and you just got to understand what's going on with real estate, and you got to play the game to win. It's very simple.
Yeah, and it's better than sitting there being a tenant and paying off somebody else's mortgage. You might as well get something now.
Totally would have to agree
And
with
then
you.
you can refinance later.
That's true. However, I personally don't think rates could ever go back down, honestly, to 3%. That's just my
Never.
personal opinion. And the reason why, because we have over $30 trillion worth of debt, right? And that doesn't include like Medicare, Social Security, and all that stuff. They don't lump that in there. But at the end of the day, we still have to pay back these bonds, and we're paying them back every single month. That's why we have the inverted yield curve. And for some of you guys don't know what that is, that means that the rates that the federal government pays you back on your bonds, the 10-year interest rate is a lot lower than the 3-year. The 3-year is higher. And typically when that happens, that is signs of a recession. I don't know if this is going to take place. However, this is all speculation. I'm just a real estate agent, some guy behind the camera making this shit up as we go along because it sounds good, right? Because it sells. But I want to take a quick commercial break, okay? Is your credit score holding you back from purchasing a home? GC Credit Coaches is a repair company that's made easy. Their goal is to challenge and remove all negative errors that hurt your credit score. On average, GC clients see about 10.2 negative items removed over 4 months. Start improving your credit score today with a simple 2-minute online enrollment for a free consultation and a complete credit audit. GC Credit Coaches offers competitive monthly pricing, no contracts, no hidden fees, and the service stops once you are satisfied. GC Credit Coaches removes inquiries, collections, charge-off bankruptcies, and repossessions. Don't forget to visit gcreditcoaches.com.
Attention contractors, remodelers, and homeowners. Is your renovation becoming a pain in the glass? Here at Glass Vegas, we take care of all of your glass needs. From a broken window to custom shower doors, mirrors, winding closures, storefronts, railings, and much more. We can even help you with new or replacement thermally broken windows. We're a full-service, woman-owned glass company that provides unparalleled workmanship, excellent communication, and great customer service. Glass Vegas. We do glass with class.
All right, guys, we are back. If this is your first time tuning in to this show, my name is Chuck. It's the host of the LV Home Experts podcast. And I'm here with my special guest, Michele Kubiak. Not too sure. I always destroy your name. I don't know why I always do this to all my guests. I do apologize. I'm so bad at this stuff. Oh, we gotta fix your headset.
Yeah.
There you go. Turn around. You gotta go like this.
Oh.
There you go.
technical difficulties over here.
Not a big deal. Okay, so here's the thing. The Federal Reserve is going to raise rates, okay, tomorrow. 25 basis points, okay? By raising rates, that also affects credit card debt, auto loans, right? And why is this important? Is because you have to think of it this way, okay? The average household income here is roughly about $80,000, okay? We know if you were going to rent out a house, that's already like $1,600, just average across the board, okay? But then your credit card debt, okay? Check this out. Most Americans will be directly affected by the rate hikes, right? What will affect credit card, mortgage debt, and the auto loan industry, okay? Most Americans have a minimum of $4,000 credit card debt. They are living paycheck to paycheck. So let me give you an example just for a credit card alone. Okay, this is fascinating. So the latest increase will likely raise the APR on your credit card at 25 basis points. So if you have a credit card with the interest rate at 21%, right? And that's kind of like normal across, according to the federal data, okay? If they raise it from 21% to about 22%, believe it or not, with a $4,000 credit card payment, now you're paying an average of $110 a month. That's just for principal and a little bit interest, not just principal. I'm sorry. It's principal and interest on it. So it increases by $110 a month, which means that it would literally take you 5 years just to pay it off. And that means you're also paying $2,200 in interest. Did I say 200? Or did I say 2,200? Okay, yeah. Sometimes the dyslexic does come out, so I do apologize. So my point here is that a lot of people today, okay, have not only one car loan, but possibly 2 car loans. How do I know this? Because I talk to people every single day. Food, costs of services have all gone up. Your mortgage or your rent has gone up. Everything has gone up. The question is, how can we actually afford all of this by constantly raising interest rates? Like tomorrow, we're about to be impacted, and a lot of people are not going to feel the pinch again until tomorrow. So my point is that should you be buying a home now, or do you think you're just going to wait until inflation runs rampant? Next thing you know it, nobody ends up buying anything because things are getting expensive. The economy slows down. Then we go into a stagflation or I don't want to say depression because that just sounds so horrible. All right. Or recession, right? So the question is, should I wait or should you be buying a home? And that's a question that I can't answer because I just don't know. But I just feel like the writing is on the wall that eventually I feel like the housing market should go down, but I don't know how much more. And the reason why I'm so confused at this time is because everybody is coming out here to buy a home because, think about it, everything's getting so expensive, right? When things get expensive, people start to look at their whole life. Okay, especially when you have over like 10,000 baby boomers about to retiring every single day. They're repositioning. They're looking at their life. They're like, okay, where do I go? What do I do? How much money or how much income do I have every single month, right? So they start looking around every single state, just like people in Hawaii, right? And I have love for people from Hawaii because that's my hometown. A lot of them are moving out here.
Yeah.
And it's the same old story, just like California. Taxes are too high, right? I don't like how this state is ran. So where do they look? They look at Las Vegas.
Yeah.
So we have on one side, right? It's like a pendulum going back and forth. It's like, yes, this is what's going on here. This is what's going on here. Should I buy or should not buy? The problem is, honestly, like I tell this to people all the time. Like, I just don't know.
Right.
That's why I asked you this question. It's like when somebody asks you, hey, should I be buying a home? Or should I just rent? Or what? What's going on, right? Now, also, I've noticed that there was an article out the other day I seen on social media. A Las Vegas is the second best place to move. A lot of people are moving on out here. And, that kind of scares me sometimes because I'm like, should I be buying an investment property? Do you know what I mean? Because things could like just increase like crazy. But it'll get to a point where, it gets so expensive, nobody else wants to move out here. It just turns into like California, turns into like Hawaii. And that could possibly happen.
It is.
So the question is, am I going to miss that boat? Now, for like investors, if an investor asks you, should I be buying an investment property or should I just kind of wait? How do you answer that question?
Well, I am under contract with one of my investors.
Mm-hmm.
And with where the rents went for SUMMERLIN, it makes sense for him. So he's like, yeah, let's do it. And we got a lot of money off the list price. It's a new build. So it makes sense for him. It just depends on what type of investor. Are they buy and hold? Are they flippers? Because I wouldn't want to be a flipper right now in this market.
Okay. Now, what do you mean by buy and hold? What does that mean?
Buy and hold to rent it out.
So are they taking a negative cash flow every single month to speculate that appreciation will go up and that's where they're going to make their money?
They're cash buyers, so it doesn't really affect them. It's an investment. It's somewhere for him to move his money to. So and he's very smart with money. So this particular buyer, in general, I kind of watch what he's doing because he watches the stocks and the bonds and all of that. And so he reached out to me to buy a house. So I just listened, and he, and there's different opportunities here too, and not so much Airbnb anymore. However, you got your travel nurses website where, it's corporate rentals where you can make a lot more money per month instead of just your 1 year lease. So yeah. I think it, depending on the location, like we just showed another buyer, Queens Ridge Towers, and she's an investor, and she's cash. And so if you think about like a $12,000 a month rent just for a 1 year lease, it pencils out.
Yeah. And your buyers, your investors, where are they from? Are they local?
Yeah. I have some that are local. I have some that are in LA, one in Hawaii.
So is the majority of your buyers out of state or local buyers?
I have a whole, because I've been doing it 22 years, so I have people that are here and out of state. And they're pretty much everywhere. Like I could go to Hawaii and go to dinner every night for a week with the people that I know from there.
Oh, wow. So you're really plugged in then.
I did.
Okay, good.
And I really cater to my sphere, but I do more than just that for business. You know what I mean? They become like family. So,
Now, let me ask you this. In today's market, is it better to buy a brand new home or a resale home?
Right now, if there's financing, like you and I had discussed, is the builders are offering lower interest rates. Some of them are. D.R. Horton is somebody, I don't know if you want me to mention them, but I know you.
Unless they're going to pay for this thing.
Yeah. So some of them are offering 4.99 to 5.5%. So depending on the buyer's situation, and what they're approved for. Okay.
And are you also selling homes too? Are you a listing agent?
Yes.
Okay.
I'm buyer heavy right now. I have a couple of listings and some more coming up. But I have buyers like coming out of the woodwork.
Yeah, it seems like a lot of buyers are coming out of the woodworks, huh?
Right.
Wow. Now, incentive-wise, what type of incentives are you seeing for like a new home build versus a resale?
It really depends on the resale seller. If they're knowledgeable about what's going on in the market, if they've been educated, where some are offering incentives and some aren't because they know that the demand is there. The builders, I see, I'm showing one again tomorrow, 3% closing cost. Average is anywhere from $5,000 to $10,000, depending on the community that you're going to.
Okay. Now, would you say buy a brand new home is better than buying a resale home in today's market?
I would, because of the lower interest rate.
But that's if you are financing.
If you're financing.
Okay. Now, also, I do want to say this. Resale, right? If you look at the price per square foot, and that's what I use as a barometer, resale is a better deal.
Right.
However, to your point, if you're doing the financing, you need closing costs, then you may want to consider a new home build. Right. The only thing that sucks about a new home build, it could literally take you 8 months to build a home. But this is what I've been doing now with some of these contracts on the financing side. I will always put a clause in there that should the builder ever reduce the base price, I automatically get a price reduction. Okay. So agents, I just shared a bunch of stuff with you. Buyers, I just shared a bunch of stuff with you too as well. So hopefully you guys find value in this podcast. Let me know in the comments below. Also, if you guys haven't had a chance to subscribe to this channel, click that subscribe button, right? That's important. Okay. Now I want to get into some stats here, and I haven't done these stats for some time, so I got to do this stats. Okay.
Yeah.
So if we take a look for single family residents, okay, as of today, the median price point for a home, right, is $425,500. Now, I talked about this all the time with the barometer as far as price per square foot. You will be paying $238 a square foot. But the fascinating part about this is we talked about supply and demand, right? There is more demand than there is supply. Even though home pricing has dropped from the 480 at all-time high down to the 425,500, the average days on the market is 20 days. 20 days, okay? Now, as far as standing inventory, we have about 1.7 months supply of standing inventory. So as of today, single-family residents, condos, and townhomes, right, there's roughly about 4,700 homes on the market. So what that means to you is that within about a month and a half, if we had no more properties to list, they would literally be all gone. Imagine all the sellers did this, right? Kind of boycotted. All right, guys, we're not going to put no properties on the market from here on out for the next 100 days. I guarantee that these home pricing will just shoot up like crazy. Now, I want to move on to townhomes, okay? Townhomes right now, okay, you can get roughly about 1,400 square feet. What do you get for that? Home pricing for a townhome, right, is $325,000 at $231 a square foot. Again, this is what we're going to use as a barometer. 16 days on the market, okay? Another one, condos. Condos are selling like hotcakes right now. Reason why condos are selling like hotcakes is because the guys that are doing the financing or the buyers, the mortgage payment is not that much, believe it or not, versus a house. And I'll get into that just a second. So a condo is $240,000 at $225 a square foot, with the average days on the market is 17 days. 17 days. That's fast.
Yeah.
That means things are actually moving. Now, so we talked about earlier with the interest rates being at 6.095% according to Zillow rates that I just pulled up today. So let's say if you bought a home at $425,500 today, right? If you put 3.5% down FHA, principal interest only would be $2,487 a month. Now, if you put down 20%, it would be $2,062 a month. Okay. So I want to ask you this question. Okay. I have an option. I'm a buyer, right? Planning on buying this home at $425,500. My question to you as an agent, should I be putting down 3.5% FHA or putting down 20% instead? Because now that brings down my payment to $2,062 versus the $2,487. What would you do?
I would put 20% down because then you don't have to pay your PMI every month.
Okay.
Whereas with 3.5% down, you have PMI that raises your mortgage payment.
Mm-hmm. Okay. So you would actually if you only had $100,000 at $425,000, you would put down $80,000, and then you would actually leverage this out to make a $2,100 payment. Correct?
Well, thinking about the numbers and how FHA though was only
3.5%. So
Right.
basically now
then
you
keep
are
all the
only
money.
putting down what, 14,000 versus 80,000. So my question to you is, do you go cash heavy, or do you go take that cash and put a chunk down so that way you have a lower payment?
a lower payment.
Okay. Now for me, right, and I'm gonna go opposite because
Okay.
we should always have different scenarios, right? Because I
Right.
want the audience out there to think for themselves. So this is the way that I want you guys to think about this, okay? At 3.5% down, you're putting down 14,000. Now at 20%, you're roughly 80,000. If you only had 100,000, right? In today's market, what do you do? Especially if there's some uncertainty. The question is, how do I reposition myself? What do I do? Now, by putting down 20%, it's only a $2,100 payment versus at 3.5, now you're paying about $2,500. So you're saving about $400. So if I put down $80,000, right, what you do is you take the 400 and you need to figure out how many months for you to accumulate that $80,000 back. That tells you how many months you have to stay in the property just to get that money back. And I could tell you right now, if we do the math, that's got to be like over 15 years. So the question is, you need to ask yourself, are you going to live in the property for 15 years?
Right.
If the answer is no, then I would rather go 3.5% down, pay the money, right? Less money up front, but have a higher mortgage because I could always refinance down the road later out of the FHA loan into a conventional, get rid of the mortgage insurance premium with the lower rate. Then also this drops it down. So that way I still have my cash, because if I went cash all the way up front by putting down 80%, rates are at 5%. If it does go down back down to 3%, I basically lost that $80,000 cash that I had. And also in today's market, there's so much uncertainty. I would rather only put down 3.5%, but still have $80,000 in my pocket just in case the shit hits the fan. It's a lot easier for me to walk away from $14,000 from a house versus $80,000 in a house. Now, I'm not telling you guys to do this, but I just want, the reason why I'm explaining this, because I want to educate you guys. I want you guys to think about these things, right? And I think this is very important because you got to do the math, right? And the math is going to be based upon your financial situation and what your plans are, right? Now, if you guys out there would like a consultation, a free buyer consultation, give us a call anytime. Now, when I say give us a call, that's me and Michele. But also, I will have Michele's contact information in the link in the description below. Now, townhouses, okay? Same interest rate, 3.5%. So right now, at 3.5%, principal and interest is $1,900 a month for a townhome, okay? If you put down 20%, right? You know what? I'm just going to skip this because we're taking a little bit long here. 3.5% is $19,000. And I'm just going to jump straight to condos. I do apologize, guys, because we are literally running out of time because I could talk about this all day long. Now, a lot of people are moving to condos. Here's why. On the condo side, right? If you put down 3.5%, it's $1,400 a month. Think about this. In today's society, people are living paycheck to paycheck. You got 2 car payments, let's just say. Right? You got credit card payments, right? You need a place to live. By making a $1,400 payment on a condo at $240,000, your down payment is literally like less than like $8,000.
Yeah.
Like that just makes sense. The downfall is I sold my condos, which is I probably shouldn't have sold the condos. I should have just kept it because I sold it to an investor, one of my followers on YouTube. She rented it out just like that. But you got to live and learn. Now, we don't have enough time, so we're going to be running out of time here. So there's a couple things that I want to show the audience, okay? Because people ask me all the time, like new communities and kind of like what's going on. So I was out the other day shooting a video home tour, okay? And there's a new product out. Have you ever been out Northwest? It's called Luna at Sunstone. It's like a new master plan community. Let me, let me pull this up because I want to show you this. This is like literally. Oh no, it's way past that. This is like literally like the last community of Las Vegas. Like you are like literally out in the middle of nowhere. However, they are actually building a lot of stuff out there. So I want to show this because I think this is really cool. Also, I think this is important as well. Let me go to this here. And Michele, I want you to take a look on top of your screen here in just a second, okay? Let me pull this up for the audience as well. Here we go. Okay. So here's the name of the community called Sunstone Luna, right, by Woodside Homes. Also, guys, when you guys head on out there, okay, the sales agent, Michael Burton and Matthew, okay, they're the sales guys out there. They actually are super cool. When you go out there, make sure to mention my name, right? So that way you guys have leverage, okay? Not only that, if you guys don't have a real estate agent, make sure to register me too as well. Now, they actually have 5 models. But before I get into that, let me zoom out for just a second. Okay. So here's the south side of town. Here's the west. Here's the north, okay? So, Michele, what you're going to do is you're going to take the 95 all the way out, okay? So, as you can see, we have Kyle Canyon here, okay? Here, right, we have Sky Canyon. Now, you see how, like, we have Sky Canyon here and on the east side of the 95 right here, Michele? Uh-huh. Sky Canyon used to own all this development land here. But the problem is that we had this freeway, right? So they actually sold it and created a whole nother community here. Master plan. That's the reason why it's called Sunstone. Now, this community has Woodside Homes, Lennar, and Trilogy as well. So that's the only neighborhood. Now, there's going to be more communities here. So this is like literally like the last road for Kyle Canyon right here. But I want to go to their website for just a second because the deals that they have are actually really good. Okay. Let me go back one more. Let's go to their website here. Now, I do have some videos uploaded, which they have a total of 6 models, right, that you can pick and choose from. Okay. I mean, look at the pricing on here. They're starting off at $410,000, right? 1,700 square feet, 3 bedrooms. Now, earlier, Michele, you know, I talked about a single family residence is $425,000, 3 bedrooms, 1,900 square feet. This right here, I mean, look how cheaper this is, right? So if you did something that's comparable to the price, I mean, you're getting 1,800 square feet. It does come with a covered patio too as well, which is really nice, and also a loft. So I just kind of want to show you guys what's going on here. And they are giving out some incentives. But, again, if you guys go to our YouTube channel, and I'm sorry to steal all the thunder away from you. I do apologize. Oh, look, this is us right here live. So check us out. We're actually live right now. Okay. So here are all the models that we have just done, right? So if you guys want to check out the video home tours, go ahead and click on that link. Check us out. But before I end this show, standing inventory is also important. If you guys want to check out the list of standing inventory, we have that. Go ahead, and I'll have a link in the description below. And that's in all the videos. You guys will be able to see exactly, you know, what builders are giving away. As far as discounted price, I literally have one property right now. A builder literally reached out to me, and the discount is unbelievable. Okay, how much of a discount are builders giving? What do you think?
I just got $25,000 off a $700,000 house. So that's pretty steep. Yeah. Check this out. I had a builder contact me and say, "Hey, look, we have a 3-story home right now that we can't get rid of. We want to do the landscaping, 5 bedrooms with a rooftop deck." They wanted like $850 for it. They said, "Hey, Chuck, if you can get me a buyer, right? This is my rock bottom number. $730,000. Awesome. That's great.
And it's like 4,900 square feet. So if you guys want to know what property that is, go ahead and reach on out to me. Now, Michele, let's talk about if somebody's interested in buying real estate, what is the best way to like get a hold of you?
You can contact me via cell phone at 702-683 6576. That goes directly to me. You can call or text.
And are you on social media?
I am. It's Michele with 1L _ M as in Michele, Kubiak, Las Vegas Realtor.
Okay.
And you can follow me on Instagram.
And one more thing, you also have a website too, right?
Yes, I do. It's myname.com.
Wait, it's your website is
My name.
My
Michele,
name?
No.
Okay.
I had a
I was
feeling
like,
you were gonna say
wait. I was
that.
like, wait.
No, it's MicheleKubiak.com.
Okay, that's
Yes.
what we want to know. So,
Yeah.
guys, I want you guys to show the love and support by checking her out. If you guys are feeling her as far as her vibe, because sometimes you guys can't get along with me, right? Because we have a whole different personality, and I understand that because that's what social media is about, right? You know, everybody has their own flavor. You know, I'm more of a, tarty type of flavor, right? Sherbet, that's kind of like my flavor. So if you guys don't like that and you guys like vanilla, check her out.
Yeah.
You know what I'm saying? I mean, there's enough money to go around. I won't be mad at whatsoever. Also, another thing I wanted to mention, this last week, believe it or not, I've got like 4 calls, right, from other buyers that are currently under contract with a new home build that they already have a real estate agent and they're running into trouble, right? And they need my help. Now, guys, this is so important that, when you're buying a home, how valuable it is to have the right agent, right? I literally have to charge these people a consultation fee, right? And my consultation fees are not even worth it. That's how high that the cost is, right? Because I just don't have the time. But I'll try my best to help you guys out. But the point of the story is make sure to have a conversation with the agent, right? And these agents are very valuable. And a lot of you agents out there, look, you can't just sell somebody a home and that's it.
Right.
Please understand your product. Know what the hell is going on. People are trusting in you on a big purchase. I mean, $300,000 is a lot of money for a house. So again, yeah, I guess that's pretty much it. I don't even know how to end this thing. Any final thoughts? You want to say something?
Yeah. Tell me how to say your last name again.
Krulsawat. All right, I'm gonna give you 30 seconds to finish up this show. We're gonna end it. Go ahead. Look at the camera right there and finish it up right there.
Thanks for joining us today. And if you are looking for a new home, I work similar to Chakits, and I've gotten my clients $75,000 off in the middle of a contract at a new build. So you have to know how to maneuver the numbers, and like you just heard Chakits, I mean, it's really important to get somebody that's gonna work for your best interest and not just for a paycheck. I wouldn't have made it 22 years if I worked like that. So I would love to help any of you. My phone number again is 702-683-6576.